Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your metals market update for this all-important Thursday, the 6th of April, 2017, and the time 3:45 p.m. Central Daylight Time. I say all-important because this is the meeting that a lot of people have been waiting for, one-on-one with an adversary to a degree and an ally to a degree, being in China. Where's this going to go with the two-day meeting? Are we going to talk about North Korea? Are the two leaders going to get along, or are they going to blow up in each other's face? They won't do it in front of the press, but we'll hear about it this coming week. You've got currency talks, trade talks, dumping talks, copyright, but I think the elephant is North Korea. And does China do anything about it, or what does the U.S. do? I was just on Australian Sky Biz, and I said, you know, if nothing gets done, I'm not saying they'd ever use it, but maybe the U.S. will threaten to put, or does put, nuclear weapons in South Korea. Let's face it, we got 28,000 troops there. We can sort of defend the weapons. And we're going to have the THAAD and everything else going there. Maybe that's what you got to put on this man's doorstep. I don't know. I'm not advocating it, but it's a possibility under this president. So as we look at the gold market, one thing to me on the weekly chart is fairly evident. You've got this area here, 1261, let's call it to the 1265 area. It's offered layers of resistance recently. Can we pop up and over it and maybe make a run at this 1284.40 area on the upper Bollinger Band? The second thing on the weekly chart are the weekly moving averages. Are we going to see the weekly 18-week moving average in red get over the green 100-week? That would be a bullish crossover. That would be nice to see too. When you just go to a daily area chart of closes, you get to see the importance of this 1260 zone on a close. You get a pop up over there, it's going to look good. You get back under 1248 on a close, it's going to look ugly. We're coming into the end of the week. That's going to be an important number tomorrow. When we come to just the daily bar chart, you've got here in the mid 1260s, three triple top areas now. Do we bust through on the fourth challenge? Often if you go for it, you do that. As a chartist, that's what you look for. When you take a look at where we're at, it doesn't look this way just visually, but believe me, this number is 1264 and a fraction, 1263.70. You got lower highs, higher lows. You're narrowing in, doing something, just bringing it all in together right there, and it's going to be important which way it breaks out. What I expect to see tonight is a jump in the 18-day moving average of closes, I call it MAC, over 1245.50 to offer some support on pullbacks, all right? You did make the higher high than you did yesterday, so the question is, does the market slip back, make a lower low, and maybe then get a reversal, be it tomorrow or the day after, to the upside, or was this the rally? We've got to weigh everything. When I bring in the Bollinger Bands, we're nowhere near the top or lower Bollinger Bands, so they're not offering me much of anything. But momentum, the market is overbought, in need of a correction, so it does one of two things. It either surges forward and takes this red line and kicks it back up, where the market starts assaulting even further overbought, hoping to become what? Embedded down the road, or this grabs hold and the market works back towards that 18-day average and you're in a corrective phase again. When we come to the gold ETF, you lost the embedded reading today. So this gives me an idea that instead of surging forward, gold might want to actually back off a little bit. I'm bothered by that as wanting to be bullish, but get over 119.77, and that can change because tomorrow is the key day. The day you lose the embedded reading, the odds of gaining it back are not great, but you can get it back the next day. And when you do, you capture a group of people that were thinking the market was going to break down, and that often adds another layer to the upside. When we come to the GDX, the gold miners, you have the clear picture of higher lows, higher highs. That's bullish. Overbought territory that's not embedded. If it can continue rally, 23.93. If it slips back, I would look for 22.96, the 18-day average of closes, to be the support. The gold-silver ratio sort of just laying here, as you can see, not breaking out. The most recent low, 68.55, but the deep break this market had was really 67.79. That's the number you got to get under if you're going to get any more of a correction really going in this market. And as you can see, silver market is stalled. Now, it is stalled because if you see my morning video, I'm pointing out where the 200-day moving average of closes is. And folks, you're coming right through here. Now, if you lose the embedded reading and you take out 1814, be careful. You could drop back to the 1780s. If you can take out 1843, you won't lose that embedded reading. The odds are it'll turn back up. You'd be in line maybe for a challenge of the upper Bollinger Band. We're at a real important junction in the metals. In the silver ETF, you kept the embedded reading, but you've got the higher high, lower low pattern. Nothing's helping you there. You've got to get over that 1739 level to tell us that we're good. Take out 1717 and lose the embedded reading, and you're probably going back to 1687. Again, the bias is up in all the metals we've looked at right now, but they got to do something with it. In the copper market, you have a clear pattern of lower highs, higher lows. And you're right back to that line in the sand, the 18-day average of closes, as the market's trying to get its foot under it and figure out what to do next. In the platinum, you have a pattern of a higher high and a lower low. As I had been pointing out, and I'm still doing it, you're caught between the 18-day average in red and the 100-day average, back and forth almost every day right now, as momentum has just flattened out. So momentum's not giving us an idea of where to go here. And as you take a look at the palladium, you're in an overbought condition in a market that had yesterday an outside day up, broke through that low. That's called a bull trap there, and you might be headed back to 788.70. Why are the platinum and the palladium acting this strange? They're used in automobiles, both in America, China. Trade, trade, trade. I think a lot of people on industrial metals are wondering what's going on behind closed doors between Premier Xi and President Trump. It's going to be very important. Of course, they're going to say they had a great constructive meeting, but that's what they always say. Then Premier Xi goes home, and we get to hear the real scuttlebutt of what's going on. In the dollar index, you got a lower low, a higher high. That is not a trend. You are overbought as can be. Gold, silver, and the others don't need a higher dollar. They need to see a bit of a lower dollar to get comfortable that something good can happen for them. Now, I want to talk to you about our research at Lynn & Associates. And what do I mean by that? We have our own writers here, and we give our clientele choices galore as to what they can choose from the information. We write as a group on all of these different categories you're going to see coming. Do you need to get them all delivered in the mailbox? Of course not. There's two ways to get our email, to get our research. You can have it emailed, and or you can use our QT platforms and read about it. And you can choose the categories you want. You can mix and match at any time. You can let us know. We'll take you off one group, put you on another, or take you off everything. But I think you'll find that the research we have, people like. Our clients get this. I want to give you a 2-week trial to it. Call us. Go to our website, or just simply click right up here. Especially if you're watching me on YouTube, you'll see the icon there. The form will appear at that point. Fill it out. If you go to our website, you'll see the carousel of free offers. Just click on the one you want. Choose from the form there. You will see right on it the different things we have. Away you go. I'm Ira. You have a great day, and I will see you all tomorrow.